Staying informed is the foundation of leveraging economic news for financial advantage. Subscribe to reliable sources like Bloomberg, Reuters, or the Wall Street Journal for in-depth analyses and timely updates. Financial newsletters can also provide daily or weekly summaries of key economic events. Additionally, use financial apps such as Yahoo Finance, Investing.com, or CNBC for real-time updates and alerts. Customize notifications based on your interests to ensure you receive relevant information promptly, keeping you ahead in the fast-paced world of economic news. Understanding economic news requires a basic grasp of economic principles like inflation, interest rates, gross domestic product, GDP, and market cycles. Numerous online courses and resources can help you learn these concepts. Contextual analysis is also crucial. Economic indicators are interconnected. For example, an increase in interest rates aims to curb inflation, but can slow economic growth. By understanding these relationships, you can better predict market reactions and make informed decisions, turning economic news into actionable insights. Economic news significantly impacts investments. For stocks, positive GDP growth often leads to higher prices, while high inflation can hurt corporate profits. Monitor quarterly earnings reports, unemployment rates, and consumer confidence indices for stock market insights. For bonds, remember that bond prices and interest rates have an inverse relationship. Keep an eye on central bank announcements and inflation data to adjust your bond investments. In commodities, geopolitical events and supply disruptions can affect prices. Track these events to time your commodity investments effectively. Economic news can guide crucial business decisions. Positive indicators like low unemployment rates and rising consumer spending suggest a conducive environment for growth. During such times, consider investing in new products, entering new markets, or expanding operations. Conversely, high inflation can erode profit margins. When inflation rates rise, review your cost structures and consider adjusting prices to maintain profitability. Look for opportunities to lock in lower costs through long-term contracts or bulk purchasing agreements, ensuring your business remains resilient. Economic news also impacts personal finance. Changes in interest rates affect savings and loan rates. When interest rates rise, lock in higher returns on savings accounts and certificates of deposit. Conversely, refinance loans during periods of lower interest rates to reduce borrowing costs. In real estate, indicators like housing starts, interest rates, and unemployment rates influence markets. A robust economy with low unemployment and rising wages boosts housing demand, driving up property prices. Use these indicators to time your real estate transactions strategically. Diversification is key to mitigating risks. Spread your investments across different asset classes like stocks, bonds, real estate, and commodities. This approach balances potential losses in one sector with gains in another, providing more stable returns. Additionally, maintain a portion of your portfolio in cash or liquid assets. This liquidity allows you to capitalize on sudden investment opportunities or cushion against market downturns. Economic news can signal upcoming market shifts, so having liquidity enables you to act swiftly and strategically. Economic news heavily influences currency values. Positive economic reports generally strengthen a country's currency, while negative news can weaken it. If you're involved in forex trading, monitor economic data such as employment figures, trade balances, and GDP growth to inform your trading decisions. Favorable currency exchange rates can also make international travel and foreign purchases more cost-effective. Keep an eye on exchange rate trends to maximize the value of your money when traveling or making large purchases in foreign currencies. Identifying long-term economic trends is crucial. Demographic shifts, technological advancements, and policy changes can significantly impact markets and industries. For example, an aging population may boost demand for healthcare services, while advancements in renewable energy technology can create new investment opportunities. Align your investment and business strategies with these long-term trends to yield substantial returns over time, ensuring your financial plans are future-proof and resilient. Central banks' policies on interest rates and monetary supply profoundly affect financial markets. Pay attention to announcements, meeting minutes, and policy changes from institutions like the Federal Reserve. For instance, an expected rate hike might prompt you to adjust your bond investments or reevaluate your borrowing plans. Staying attuned to central bank activities helps you anticipate market movements and make informed financial decisions. Consulting financial advisors can provide personalized advice based on the latest economic news and your financial goals. Their expertise helps navigate complex economic landscapes and make informed decisions. Additionally, engaging with investment communities or groups allows you to exchange ideas and insights with others. Discussing economic news and its implications with peers can provide diverse perspectives and enhance your understanding, ensuring you stay well-informed and strategically positioned. By consistently following these strategies, you can better navigate economic news and use it to your financial advantage. Staying informed, understanding the news, and making strategic decisions will help you optimize your investments, business plans, and personal finances in an ever-changing economic landscape.